stocks are going lower. So what is actually going on in the stock market? Like, I mean, if we just take a look at the S&P 500, let's take a look at the S&Ps. Okay, this is a nasty chart. I mean, this is a daily look, daily overview. Well, like what is this? Like 1, 2, 3, 4 days up, big gap up, consolidation. This is a distribution phase right here, very tight range. If you guys were trading last week, you understood how frustrating that was. Big gap up, oversupply. Looks like we're getting ready to test this channel from the 2nd of February, push into this 50-day moving average. Everything's going to be, perfect, right? We just get over the 50-day moving average on the S&Ps, which is currently sitting at 459.79. Life is good, right? Sun starts shining brighter. Everyone's making money. Everyone's happy. We're laughing. We're singing. We're dancing. Okay, we knew that we had the CPI data numbers coming in. Initially, we got that sell-off in the pre-market. We already had all of those people, all those worry warts, super scared. Everyone starts selling their positions. Hedge funds start unloading. Institutions maybe start backing out. Numbers come out. They were a couple ticks over, but is that a shock? You have to start thinking about it. We know that the inflation is not going to get better anytime soon. Were we really shocked that the year over year was going to be higher than the expected 7.2? We came in at 7.5. Was that really a shock? So what you're telling me, and I'm just reading the narrative through the lines. What you're telling me is that all of this sell-off here did not price this in yet. Okay. If this sell-off did not price this in, right? And how you can know that this has not been priced in yet is because the amazing day that the bulls had yesterday, where, we were having trouble getting out of this range, right? A lot of supply ahead. We were having a lot of trouble. So overnight futures, they helped us out. They gapped us over supply over the 50 EMA. All we really needed to do was absorb this bad news that we got today, which we knew was coming, absorb this bad news, take out the highs, and start challenging the 50-day moving average. As soon as we can close over the 50-day moving average, everything was going to be crimson and clover. So with that being said, the news initially, I was happy this morning because the bad news was shaken off pretty easy. We did catch support and then we rallied. We had 2.5 hours worth of upward moves. Things looked like they were going to test the day's highs. Everything looked very, very good. So as the day started to go on, now there's only about 30 minutes left of the market open. This nasty wick that we have forming here is not good. There's a lot of bulls that are trapped in this area. Anytime you start seeing big wicks up or down, you either got bulls or bears that are trapped. Like if we look down here at our previous demand zone, so many bears, eager shorts that came late to the party. This is like, you're throwing the best party of all time, right? You're throwing the best party of all time. You guys have been partying all night long. And then you got the group of friends who just show up like after you're already hammered, right? I mean, and you get trapped, right? This is the same kind of story. Okay. It's like right now there's so many bulls that are trapped in this area and they're pushing the price down. They're going to have to start covering their positions on their longs just due to the fact that currently on the S&Ps right now, we are down almost 2%, 8 points on the day, and it's aggressively starting to speed up. We have officially just lost a 5 and 10-day moving average. This is not good. This is not what we wanted to see today because the bottom of this range is going to be down here at the 200-day moving average, which is 444. So if we kind of look at from the start of this, right, we had our first leg down and then we had our relief bounce. Then we had our second flush consolidation and then we had our relief bounce, right? So this is one leg down, 2 legs down. After we made this new push higher, we came down and sort of consolidated, which at this point in time, higher low, higher low, higher low. So are we going to correct back down and put in that third leg down, which would be a full correction and could send, things like the SPY or things like the triple Qs, the NASDAQ stocks into, a bear market, right? It's tough. It's very frustrating, especially if you're a long-term holder. I mean, even though I am not a long-term investor, I'm just a scalper, I'm a day trader, it's still very, very tough to form a bias, right? One day everything looks good, the next day things look bad. We're kind of always waiting for that next catalyst. It's kind of like, things don't hold or catch a bid for longer than seems like 3 seconds. And it's like, what are you going to do? Guys just trying to make a living out here. Stay safe in this environment. What it looks like is happening is that we're going to fall back into this range. And if we fall back into this range between 444 and 450, expect some chop. Expect some more chop. Expect some more sideways action until we lose 444. Okay, expect it to be choppy. Until we reclaim 460, expect it to be choppy. Yes, you might get a 1-day run up here, 2-day run up here, but expect it to overall be choppy, right? We come back into this zone like we are, expect it to be choppy. Now, if you're looking for a short position, I really wouldn't want to get, again, I really wouldn't want to be too late to the party here and just start shorting. Bulls can catch a bid and rally this right back up. So what I would wait for is let us come down here and test the 200-day moving average, 444. If we do lose the 200-day moving average, then that means that we broke this whole distribution phase here. We could not attempt to reclaim the 50-day moving average. Market is telling you that we are extremely weak. You have room down to 439, 440. Okay, this is your trade. 439, 440, that's your potential trade. As painful as it is for me to say, because, I hate when the market goes down. Like, I have to make money. I have to trade somehow. So if the market does go down, yes, I will be buying put options. I will be selling. But, I also have a mortgage and I have a family to take care of. But if we take a look at this range here, if we do start to lose, okay, if we do start to lose, why did my color do that? If we do start to lose, why did it do that? Anyways, if we do start to lose 439, this is not what we want to see. We could most definitely come back down here into this previous demand zone and kind of test this area. If the market does want to continue to be weak and it loses this area, be prepared for a long road ahead. A long road ahead. We could be looking at a bear market. We could be looking at a bigger correction. And with that being said, we just kind of have to stay on our P's and Q's and definitely want to pay attention to what the futures are doing overnight. We don't want to get overzealous, but right now, as I continue to talk, futures the S&Ps continue to drop lower into this range. I could see us testing 444 before the week is over. Until next time, guys, if you want more content like this, stick around on my channel, subscribe, join my Discord. That link is down in the description box below, and I will see you guys all in the next trading video.